Example number 1 on step acquisitions. What it says. Statement of financial position as at 31st December 2018 are as follows. P Limited, S Limited, and T Limited separately they have given the statement of financial positions. And then they have given us the acquisition information. On 1st of April 2014, P acquired 10% of S for 1,000 rupees. It means this 1,000 need to be accounted, or this acquisition need to be accounted as per LKS 39 financial instruments. When S Limited's retained earnings stood at 500, that doesn't really matter. And what happened? On 1st of April 2015, P Limited acquired a further 45% for 7,000. Initially, they have acquired 10%. A year later, they have acquired further 45% for 7,000. On that date, the retained earnings of the acquiree was 1,200, and the fair value of the previous investment, it means on this investment, the fair value of the previous investment was 1,560. Further, on the third bullet point, it says what? On 1st of April 2016, S acquired 20% and P acquired 40% in T when T Limited's retained earnings stood at 600. So they have given quite a bit of acquired information, acquisition information, right? Acquisition details. What should be our approach? What we need to do first? Acquisition information ටිකක් වෙනස්. Right? There are something more here. What we need to do? What should be our approach? Where we need to start from? Where? First, we need to map these given information. We need to see the big picture. What has happened? Right? So we need to map these given acquisition information. So we'll map it first. Acquisition information. Acquisition information. We are going to map the acquisition information. What are the information they have provided? On 1st of April 2014, P acquired 10% of S. On 1st of April 2014, what has happened? P company has acquired 10% of S. For 1,000, it means to acquire this 10%, they have invested how much? 1,000. And as at the date of acquisition, retained earnings were stood at 500. So what are the equity components we are having here? Stated capital and retained earnings. Stated capital and retained earnings. Retained earnings as at this date were stood at 500. 500. What about the stated capital? Stated capital of S Limited. We assume that this amount has not been changed over the years. So we can assume that 2,000 worth of stated capital was there as at this date as well. So altogether, there were net assets worth of 2,500. So this is what they provide under bullet point number 1. Then on 1st of April 2015, exactly a year after, P Limited acquired a further 45% for 7,000. On this date. 1st of April 2015. What has happened? Company P, right? Company P has acquired another 45% of company Z. They have acquired another 45% of company S. For 7,000, it means the investment value is 7,000. To acquire this 45% of S, they have invested 7,000. And on that date, the retained earnings of the acquiree was 1,200. On this date, right, the retained earnings of the acquiree, retained earnings as at this date was 1,200. 1,200. What should be the stated capital amount? Stated capital of S Limited, 2,000. 2,000. We'll assume that 2,000 figure was there as at this date as well, and it has not been changed over the time. So altogether, our net assets worth of 3,200 as at the acquisition date, as at this date. What else? And the fair value of the previous investment was 1,560. Fair value of the previous investment was 1,560. It means it talks about this. As at this date, investment at cost, it was 1,000. On this date, they have reassessed the fair value of this investment. We called it fair value of previously held equity interest. Fair value of previously held, previously held equity interest. It means this is the cost. Now the fair value of this 1,000 is what? That is 1,560. 1,560. 1,560. Those are coming under second bullet point. Then here on the last bullet point, what it says, on 1st of April 2016. On 1st of April 2016 means somewhere here. 1st of April 2016. What has happened? S has acquired 20% and P acquired 40% in T. Company S has acquired 20% in T. On the same date, P has acquired 40% in T. Company P also has acquired 40% in T. Then when T Limited's retained earnings stood at 600, it means as at this date, their retained earnings was how much? Was it 600? Yes, 600. Retained earnings amount was 600 as at this date. As at this date. So here, what should be the stated capital amount? We assume the figure has not been changed during the time, over the time. That should be then 2,000. 2,000. So it is 2,600 altogether. And we are preparing consolidated statement of financial position as at which date? 31st December 2015. 80. So this is how it should look like when we map these acquisition information. What else is missing here? Yes, we need to determine the NCI value. But here do we need to calculate any NCI? No, 10%. When it is not a subsidiary for us, we should not calculate the NCI. But we can see what? On this date, on 1st of April 2015, what has happened? It has become, company S has become a subsidiary for us. Then we need to determine the NCI value here. When it is a subsidiary for us, we should know, right, the NCI amount. So on 1st of April 2015, we should calculate the NCI value. What else is missing here? Yes, investment values here. To acquire this 20% of T, to acquire this 20% of T, what is the amount invested by S? Investment in T by S Limited, that is how much? 800. 800. Likewise, to invest or to acquire this 40% in T, P has invested how much? 2000. He has invested 2000. And we need to determine the NCI of T as well. Right. So before determining NCI, what we need to have? We need to graph the group structure. We need to determine the group structure. Now, how our group structure should be? Then our group structure එක හැදෙන්න ඕන කොහොමද? How? See, we are company P Limited. They have acquired what? Initially, they have acquired 10% of S, and then on this date, they have further acquired another 45% of S. Altogether, now, as at 31st December 2018, they are controlling 55% of whom? S. Now they are controlling 55% of S Limited. And what else? S has acquired, see here, S has acquired 20% in T. S has acquired 20% in T. And P also has directly invested 40% on T. P also has directly invested 40% on T Limited. Now tell me whether T is a subsidiary for us. Yes or no? Yes. S is a subsidiary. First, look at S. S is a subsidiary. Initially, it was merely an investment, and we may have accounted as per LKS 39, financial instruments. But because of this further acquisition, what has happened? We are holding more than 50% of the equity shares of S as of today. It means S is a subsidiary for us. S is a subsidiary for us. And we have directly invested 40% and our subsidiary has invested 20%. Altogether, parent and the subsidiary combinedly has invested more than 50%. In T, it means P company has the control over T. Therefore, T is also the subsidiary for P Limited. T is also the subsidiary. Then what? For P Limited, there are two subsidiaries. One is company S and the other one is company T. For these two subsidiaries, what we need to determine? The effective holding percentage and NCI percentage. Effective holding percentage and NCI percentage. What is the effective holding percentage of S Limited? Here. What is the effective holding percentage of S Limited? That is what? 55%. Effective holding percentage, yes, 55%. If effective holding percentage is 55%, what should be the NCI percentage? That should be 45%. With respect to T, what should be the effective holding percentage? They have directly invested 40%. Directly invested 40%. And through S, they have invested 20%. It means 55% into 20%. So what should be the value? 55% into 20%, that is 11% plus this 40%, altogether it should be 51%. 51% is the effective holding percentage of, yes, effective holding percentage of T Limited. The NCI percentage should be what? 49%. 49%. Right. Was there anything new? Yes, only one thing. What is that? This fair value of previously held equity in interest is given as 1,560. So cost of previously held equity investment was how much? This is the fair value. What about the cost? Cost of previously held equity interest. Like in short form, I have written as PHEI, previously held equity interest. What is the cost of previously held equity interest? කලින් අපි acquire කරගෙන තියෙන equity percentage එකේ cost එක කීයද? ඒ ටික acquire කරගන්න අපිට කීයක cost එකක් ගියාද? Yes, cost is 1000. Cost is 1000 on the date that this particular company becoming a subsidiary for us. We have assessed the fair value of that investment and found the fair value to be 1,560. Right? Fair value to be 1,560. The value has gone up by 560. එදාවිති මේකේ cost එකට වඩා 560කින් අගේ වැඩි වෙලා. මේ investment එකේ අගේ වැඩි වෙලා. Right. So this is the only stuff that we met. Something new on this. Right. What about the NCI here? NCI of S. The same way. Net assets as at the acquisition date or on the date where it becomes a subsidiary for us. මෙදා නේද මෙයා අපිට subsidiary එකක් වෙන්නේ. Why? 10% acquire කරගෙන තිබ්බ මෙදා තව 45ක් මෙදා acquire කරගන්නවා කියන්නේ as at this date S is becoming a subsidiary for us. Altogether we have 55% of equity shares of S as at 1st of April 2015. So what about the NCI value there? Subsidiary එකක් වෙන දවසේ මෙන්න මෙච්චර worth of net assets තිබ්බා. There were net assets worth of 3,200 when S is becoming a subsidiary for us. What is the NCI percentage? That is 45%. 45%. So 3,200 into 45%, amount should be 1,440 NCI value. Here, yes, T is also a subsidiary for us and it has become a subsidiary for us on this particular date. So as at that date, or as at the date of acquisition, what is the NCI value? There were total net assets of T Limited worth of 2,600. What is the amount that belongs to the other shareholders out of this? That is 49%. This percentage. So what should be the amount? 2,600 into 49% means 1,274. 1,274. See, right? The sum is different. What it is different to what we have done previously, but still we keep on the same. We have followed the same procedure. Whatever the information they have provided, we have mapped, right? And then by mapping, we can clearly see on what date what has happened. See here, S is not a subsidiary for us on this date, and it has become a subsidiary from 1st of April 2015 onwards. And T is becoming a subsidiary for us from 1st of April 2016 onwards. Then on the date where it becomes the subsidiary for us, we should know the fair value of identifiable net assets for both these two companies. The same thing which we have discussed again and again. Right. So here only the new thing is this. Right. We have already had an equity interest of S Limited previously, and when it becomes a subsidiary for us, we have to determine the fair value of that previously held equity interest amount, and it found to be 1,560. 1,560. That is the only new additional thing that you have met in this sum. Okay. Then what we need to do next? We need to write rule for this sum. We are preparing group financial statements for the P Limited group. P Limited group consolidated statement of financial position as at when? 31st December 2018. Right? 31st December 2008. Okay. We have non-current assets. Take it over here. And the investment values will be set off. But there will be a goodwill. If there is a goodwill, we need to allocate a space for that. We need to compute that. And we have current assets and total assets. Then as equity, we have stated capital, we have retained earnings. Since we have subsidiaries, we should have the NCI value as well. Right. Equity attributable to parent company shareholders. This amount you need to separately disclose. The summation of stated capital and retained earnings should be what? Equity attributable to parent company shareholders. For that you need to add NCI. Right? For that you need to add NCI, then it will be what? Total equity. So for the moment I will consider directly the NCI value here. Right. And then liabilities. So we should have total equity and liabilities. So this is how our consolidated statement of financial position should be. And then we need to rule for the working. need to vote for the working number 1. Consolidation. How many columns we need to have? How many columns we need to have? At the end, what has happened throughout this time period? At the end, how many subsidiaries we are having? We are having 2 subsidiaries. For each subsidiary, we should have what? We should have a column to calculate the goodwill as well as NCI. Goodwill of subsidiary S and NCI of subsidiary S. For D also, we need to have a separate column to calculate the goodwill as well as NCI. And finally, the group retained earnings column. And then what? Post acquisition. Post acquisition of S Limited and post acquisition of T Limited. 2 subsidiaries. Right. What we need to do next? Yes, we are into a different topic, but I am keeping on following the same procedures. Right? We are into a different topic, step acquisitions, but see, I'm following the same procedures. First, we have mapped the given acquisition details. We have mapped the acquisition information, and then we have ruled for the sum. And then what next? What we need to do next? Line by line addition. Line by line addition. Non-current assets. Parent company 22,000 plus S Limited 6,000 plus T Limited 4,000, altogether 32,000. Goodwill we will take from our working number 1. Current assets 3,000 with respect to the parent, S Limited 500, T Limited 1,700. Assets and liabilities, line by line addition, right? Line by line addition with respect to assets and liabilities. But for stated capital, what we have done? We have considered the parent company's what figure? Year-end amount. Parent company's year-end amount. Here, that is 15,000. 15,000. Retained earnings again we will take from our working number 1 as usual, and NCI value also will be taken from working number 1. Liabilities, parent company 8,000, S Limited 2,800 and T Limited 2,700. Altogether 13,500. 13,500. Right. Then, okay, we have done the line by line addition with respect to assets and liabilities, and in terms of stated capital, we have considered the parent company's year-end amount. Then what we need to do? We have mapped, we have ruled, including the workings, and then we have done the line by line addition. Stated capital, we have considered the parent company's year-end amount. Then what we need to do? Then what we have done in the previous examples, what we have done? We have calculated the goodwill from the acquisition, isn't it? So here also we need to compute the goodwill. Here also we need to compute the goodwill as a result of the acquisition. How we have computed goodwill? So far, how we have calculated goodwill? Goodwill how? how we have calculated goodwill. කොහොමද goodwill එක calculate කරේ? I think for more than 10 times, more than 12 times, we have calculated goodwill so far. Goodwill generated through the acquisition, yes. Investment plus NCI minus net assets. But when it comes to step acquisitions, we need to be a bit careful on that. Right? When it comes to step acquisition, when computing the goodwill value, we need to be a bit careful on computing the goodwill. Right. Okay. Investment in S plus NCI in S minus net assets in S. This is how we have computed so far. But when it comes to a step acquisition, we need to consider what? We need to consider this one. Fair value of previously held equity interest. We need to consider the fair value of previously held equity interest as fair. Where does this requirement comes from? A requirement again. Can you remember this one? Right, the presentation we discussed on the very first day. There, SLFRS 3 business combination standard provides us the guidance on these aspects. See the fifth point, non-controlling interest and goodwill or a gain on bargain purchase. So we'll move to that point number 5, right? Non-controlling interest, NCI, and goodwill or GBP, gain on bargain purchase. What it says here, goodwill measured as the difference between what? Sum of what? Fair value of consideration transfer, that is what we considered as investment. Recognize amount of any NCI in the acquiry, that is why we add NCI to the investment value, investment plus NCI. Then difference between, so this is what we are deducting. I recognize amount of the identifiable net assets acquired and liabilities assumed. That is why we are deducting net assets. But so far we have not met this point, the third point in that. What it says, fair value of any previously held equity interest in the acquiry for a business combination achieved in stages. When it comes to step acquisitions or a business combinations achieved in stages, then what we need to do, we need to consider, right, the fair value of any previously held equity interest. Ara dahe then fair value එක consider කරන්න කියලාද මේ කියන්නේ එපා කියලාද? Goodwill එක cal කරද්දි කලින් investment එකේ fair value එක consider කරන්න කියලා මේ කියන්නේ. Right? Fair value of any previously held equity interest in the acquiry. So here, apart from investment plus NCI minus net assets, what we need to consider, fair value of previously held equity interest. Fair value of previously held equity interest. Fair value of previously held equity interest that we need to consider when computing the goodwill. Okay, right. Here, what is the investment value? What is the investment value? What is the investment value? If you go through the balance sheet, investment in S, see here, investment in S, it shows as 8,000. debit 8,000. So this one we need to credit. Credit කරාම මෙයාව අපේ පොත් වලින් අයින් වෙලා යන්නේ. එතකොට එයා ඕන credit කරා 8,000. By the way, what is that 8,000? That is what? This 1,000 plus this 7,000, isn't it? මේ අපි කලින් 110 acquire කරගන්න invest කරපු amount එකයි මේ 145 invest කරගන්න amount එකයි දෙකේම total එක තමයි අපේ මේ balance sheet එකේ පෙන්නන්නේ. That 8,000. Right? ඔන්න 8,000 credit කරා. Now there is no more any investment account. That amount credited. Where to debit? Where to debit? ඔන්න මෙතෙන්ට debit කරගත්තා. Investment amount is 8,000. Not only this 7,000, right? The total investment that we have made. Right? Now, we'll consider this one. Okay. On this date, S Limited is becoming a subsidiary for us now. At that date, to acquire this 45%, we have invested how much? We have invested 7,000. We have invested 7,000. Right? We have invested 7,000. What is the NCI value as at this date? When SC is becoming a subsidiary for us, what is the NCI value? S Limited අපිට subsidiary එකක් වෙන දවසේ එයාගේ NCI value එක කීයද? That is 1,440. 1,440. Net assets, when SC is becoming a subsidiary for us, or when we acquire the control over S, when we establish the control over S, net assets of S Limited were stood at what figure? 3,200. 3,200. Here, this is regarding a step acquisition. This is regarding a step acquisition. Then we need to consider what? Then we need to consider, as per SLFRS 3, the fair value of previously held equity interest in determining the goodwill. In determining the goodwill, we need to consider this one as well. What is the fair value of previously held equity interest amount? What? That is 1,560. 1,560. Then make accounts එක කොහොමද යන්නේ? This 8,000 comprised with what? That previously acquired the investment we made to acquire that 10% was 1,000, and to acquire that 45% we have additionally made another 7,000. That 7,000 plus that this 1,000 is what we have here as 8,000. What me 8,000 ඇවිල්ලා තියෙන විදිය තේරෙනව නේද? Right? So 8,000 means to acquire this 10% we have invested 1,000, and to acquire this 45% we have invested another 7,000. Altogether it is 8,000. So that means 8,000 ඇවිල්ලා තියෙන්නේ. Then what we have done, we have credited 7,000 of this. මෙතනින් 7,000 credit කරලා ඒ 7,000 debit කරා කොතෙන්ටද? අර 45% acquire කරගන්න අපි invest කරපු 7,000 මෙතනින් credit කරා. Credit කරලා debit කරා කොතෙන්ටද? Cost of control account එකට. ඒ 7,000 තමයි මේ අපි මෙතන පෙන්නන්නේ. 7,000. You have debited to the cost of control account. එතකොට දැන් මෙතන කීයක් තියෙනවද? What is the amount left with here? What? දැන් investment in S කියලා දැන් අපි එතනින් 7,000 අයින් කරානේ. තව කීයක් තියෙනවද මෙතන? තව මෙතන 1000ක් තියෙනවා. Right? Another 1,000 is left here, right? We have only credited 7,000 and debited 7,000 here. Another 1,000 is left with here as investment value. That one what we need to do? that again we need to credit. On 8,000 to tabi credit kara. Then nothing will be here as investment value. Investment in skill on the kiyak pat ne. Ara antima daha tabi credit kara. Credit karala debit karanne kotentad. When අපි debit කරලා cost of control account එකට අර 1000ම නේද ඔය 1560ක් කියලා debit කරලා තියෙන්නේ. We have credited 1000 and debited 1560 to our cost of control account. එතකොට balance නෑ නේද? credit වෙලා තියෙන්නේ 1000යි debit වෙලා තියෙනවා 1560. ඔය වෙනස කොහාටද යවන්නේ? The difference is 560. Where do we need to consider that? Investment එකේ value එක වැඩි වෙලා අපිට ඒක ලාභයිද පාඩුයිද? ලාභයි. Then the difference we need to adjust to where? To group retained earnings. Debit වෙන්න ඕනද credit වෙන්න ඕනද? Debit වෙන්න ඕනද credit වෙන්න ඕනද? That 560 increase in fair value. I'm talking about this, right? The cost was 1000 and once we assess the fair value it was 1560. Cost එක තමයි අපි අර investment එක credit කරේ. එතකොට ඒකේ මුකුත් value එකක් ඉතුරු වෙන්නේ නැහැ. And we have debited to our cost of control account the fair value of it 1560. So the remaining 560 need to be debited to where? Group retained earnings. Need to be credited to group retained earnings. හරිනේ. එතකොට credit වුණා 1000ක් මේ 560ත් credit වුණා 1560යි debited to the cost of control account 1560. So simply the increase in the fair value. The increase in fair value should be reflected from where? Should be reflected in our group retained earnings. එතකොට fair value එක වැඩි වෙලා තියෙනවා 560කින් ඒ 560 reflect වෙන්න ඕන කොතනද? In our group retained earnings. Right. Okay. So what is the goodwill? What is the goodwill value here? The goodwill value should be 6,800. 6,800. This is something we met when it comes to step acquisitions. Fair value of previously held equity interest we need to consider when determining the goodwill. And the difference between the cost and fair value we need to charge to group retained earnings. Right? Okay. With respect to the acquisition of S, we have determined the goodwill. Then we have another subsidiary. We have acquired T as well. So we need to determine the goodwill of T. How? Investment in T. In T, we also have invested and our subsidiary also have invested. T by P. And investment in T by S. Then for that we need to add NCI and deduct net assets of T. T will further acquisition no. There is no any further acquisition or a step acquisition on T. S වල තමයි අර further acquisition එකක් ගියේ. කලින් 10% අරන් තිබ්බ එකේ තව 45% පස්සේ ගත්තා. හැබැයි T limited වල මේ ගාන විදියට එහෙම මොකොත් වෙලා නැහැ. Therefore we do not need to consider what fair value of previously held equity interest කියලා එකක් generate වෙන්නේ නැහැ. Right. Investment in T by P. What is the investment value? What is the investment value? To acquire this 40% of T, P has invested 2,000. And to acquire this 20% in T, S has invested 800. This 800 belongs to parent company shareholders as well as to the other shareholders. So what is the amount belonging to the parent company shareholders? That is 800 into effective holding percentage of S, 55%. Yes, 440. So 440 need to be debited to the cost of control account. The remaining 45%, remaining 45% should be debited to the other shareholders of S. They are reflected in NCI of S. NCI of S means simply what? Other shareholders of S. 360 need to be debited there. NCI value, NCI of T, that is 1274. 1274. 1274. Cost of control account debit, NCI of T account credit. Right. Net assets of T as at the acquisition date or on the date where T is becoming a subsidiary for company P Limited, the net assets of T Limited was 2,600. Net assets කියලා දැම්මට අපි ඇත්තටම ගන්න ඕන මොකක්ද? Fair value of identifiable net assets. It means if there are any fair value adjustments, we need to adjust for that, and then we need to consider the final figure. Fair value of identifiable net assets. Here, since there are no any fair value adjustments, the fair value of identifiable net assets is equals to what? Book value of identifiable net assets, that is 2,600. We need to deduct that. So what is the goodwill amount generated through acquisition of T? That is 1,140. 1,140. Right. So we have computed the goodwill. The same procedure we are following. We have mapped, we have ruled, we have done the line by line addition. Stated capital, we have considered the parent company's year-end amount, and then we have computed the goodwill generated through the acquisitions. Then what's next? What we need to do next? What? We need to allocate the post-acquisition profits. We need to allocate the post-acquisition profits of our subsidiaries. S&T. Post-acquisition of S. Retained earnings as at balance sheet date of S Limited was how much? Balance sheet date ekedi S Limited ke retained earnings kiyak tiyanawada? See here, that is 2,500. What about the retained earnings as at the acquisition date? What about the retained earnings as at the acquisition date? Then we can determine the post-acquisition amount now. What should be the figure here? Retained earnings as at the acquisition date is what? Should be what? Here 500 to 1,200. Is it 500 or 1,200? What? Yes, 1,200 on this date, on 1st of April 2015 only. The S Limited is becoming a subsidiary for us, right? On that date, their retained earnings value was to that 1,200. So the value we need to consider here should be 1,200. As at the acquisition date, they had retained earnings worth of 1,200. So what should be the post-acquisition amount? That is 1,300. This 1,300 we need to allocate between whom? Between parent company shareholders and other shareholders. So out of this 1,300, what is the percentage that should belongs to the parent company shareholders? SK effective holding percentage එක කීයද? What here? 55%. 55%. It means 715 should be belongs to the parent company shareholders. What about NCI of S? Other shareholders today out of this post acquisition, the remaining 45% should belongs to the other shareholders of S. That is 585. Likewise, retained earnings of T, post-acquisition profits of T, post-acquisition reserve amounts of T. As at the balance sheet date, what here? Balance sheet date with the T limited retained earnings spend amount 1,000. As at the acquisition date, on this date, T is becoming a subsidiary for us. It means we acquire T on this date. As at that date, their retained earnings amount was 600. 600. Therefore, the post-acquisition amount is 400. Post-acquisition amount is 400. Right, 400. So out of this 400, what is the effective holding percentage of T? Or what is the amount that should belong to the parent company shareholders? Here, that is 51%. Out of this, 51% should belongs to the parent company shareholders. The remaining 49%, other shareholders of T. It means we need to allocate it to NCI of T. Out of this 400, the remaining 49% should belongs to NCI of T, 196. Then with respect to the retained earnings of the parent company, we are considering what? The year-end amount. Year-end amount is 12,000. 12,000. Right. So we have done it. Let's complete this working. Goodwill by the acquisition of S, there is a goodwill of 6,800. Through the acquisition of T, goodwill worth of this much has been generated, and NCI of S, that is 1,665, and here NCI of T 1,470. Group retained earnings 13,479. Non-current assets 32,000. Goodwill we can take from the working 6,800 here and another 1,114 here. Altogether 7,940. Yes. Current assets 5,200. It means altogether we have total assets for the group worth of 45,140. 45,140. Retained earnings we can take it from the work in, that should be 30,479. NCI value also we can take from the work in, 1,665 plus this one, 1,470. So altogether 3,135. Liability is 13,500. Therefore, total equity and liability should also be equals to what? 45,140. See how easy it is when we follow through the procedures. First, map the given acquisition information. It can be any form, right? So basically what we know, on which date what has happened, who has acquired whom, what is the percentage, what is the investment value, as at that date how the net assets of the acquiree stood, and what is the NCI. Based on these given acquisition information, what is the group structure, we need to determine on that, and based on the group structure what effective holding and NCI percentages are. That is the first stuff that we need to do, right? First thing we need to do. And then with respect to assets and liabilities, what we have done, line by line addition. Stated capital now, we have considered the parent company's year-end amount. Then we need to determine the goodwill generated through the acquisition. So here in this case, we have acquired two companies, S and T. So for S, we need to compute the goodwill separately, and for T, we need to compute the goodwill separately. Since with respect to S, it involves a step acquisition, earlier 10%, and then only we have acquired 45%. Further acquisition, step acquisition in stages. Then in such cases, we need to consider what? When determining the goodwill, we need to consider the fair value of previously held equity interest. Right? So we have determined the goodwill generated through the acquisition of S and T separately, and then we need to allocate the post-acquisition amounts, right? Post-acquisition amounts among the parent company shareholders and other shareholders. If we have two subsidiaries, separately. Three subsidiaries again, separately. What is the amount that need to be allocated to the parent company shareholders and other shareholders, right? And finally, with respect to the parent company, we have considered the year-end retained earnings amount. That is all what we have done. The same procedure we have followed. Okay. So only here, the new thing was here. Fair value of previously held equity interest. We need to consider when determining the goodwill. Any difference with respect to the cost of the investment, we need to charge to the P&L, right? We need to transfer to the P&L, or we need to consider under group retained earnings, right?